Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. I've got a lot to cover today. We are going to look at the aspects which I don't normally cover. I'm going to show you and give you the updates. If you watch to the end of this video, I promise you are going to know all the inner workings of what's happening, at least at the level that we're allowed to discuss this. The first thing I want to look at is the shutouts and shutdowns. What's been happening, a lot of situations have been escalating, and I want to bring you that information. The second is the seizures and restrictions. So much of the little nuances that have been taking place are affecting what you experience wherever it is that you are. You might be in the United States and watching gas prices rise. Maybe you're in Australia and your energy prices are rising. A lot of that is a domino effect. Third thing is the Bretton Woods III. What am I talking about? I'll show you that and more. Let's begin. Here we have it. Goldman Sachs shutters Russia business. First major Wall Street bank to leave after the Ukraine war. They won't be the last, I'm sure. You've seen Coca-Cola, you've seen Starbucks, you've seen all these big corporations that have basically kind of been forced into closing down. I'm sure they didn't want to because of the corporate profits that are going to be affected, but because of the outrage on social media and in the regular media and just in general, they have had to close down their businesses, at least temporarily. We'll see what happens in the future. But this right here is just showing us that some of the banks, not Deutsche Bank is going to stay operating in Russia, but Goldman Sachs is saying, hey, we're pulling out. PwC, the rest of the auditors are doing the same thing. This is important, of course, because that means in general, the big businesses are starting to turn away. That's big money. Okay, we don't know the long-term effects of it, but generally that's not good. You want to see more businesses, you want to see more manufacturing, you want to see services. But of course, there's a lot of political pressure on these companies here. Hey, you want to be a too big to fail kind of company, you got to be on our side. So you have to say, do what we say and that sort of thing. Russia to temporarily suspend fertilizer exports. I think it is very important that people really understand what this means. These farms require this stuff. They're using this stuff. If they can't get it from Russia, they're going to be getting it from somewhere else. They're a huge exporter of fertilizer. If they can't get it from there, they have to seek another partner. Who's going to be that partner? Well, I don't know, but I'll tell you right now, they're going to be facing a lot of demand. What does that mean? Prices up. What does that mean? Farmers have to pay more for their fertilizer, and that means higher food prices. And that, of course, could also, maybe they reduce the amount of fertilizer they use, so that means less of a yield on their crops. That means less money for their crops. That means, are we going to do another farmer bailout? I don't know. What's the resolution to this? All I can tell you right now is that what we are seeing is not positive. That's why I tell people, do what you can in your own terms. If that means growing a backyard garden, do that. If that means buying in bulk today, do that. We need to get a handle on this stuff, all right? Let's move around the table quick. I want to show you what's happening right now as it relates to the seizures and the restrictions. There's so much data that's been coming up to the table right now, and I'm here to bring it to you. This is Jim Rickards. The latest dumb idea from DC is to freeze Russian gold. It's physical. It's in Russia. Only way to freeze it is to leave it outside in the winter. You can freeze dollar sale proceeds, but Russia's a buyer, not a seller. They can buy from Russia mines. Can anyone in DC play this game? And I just have to mention the fact, I'm sure he knows this anyway, but it's just the fact that what we're seeing now, a lot of this is just going to be out there, rhetoric in a sense, saber rattling. Oh, we're putting restrictions on you. Oh, we're not friends anymore. That's the kind of thing that we're seeing at this point. So whether it gets to the next levels, I don't know, but certainly you could see the tension is there. Whether we measure that in the VIX index, the MOVE index, or you look at something simply like oil, which has come down significantly from its peak, it's still very elevated. I mean, as I record this video, it's about $109 a barrel. So I would be paying very close attention to what happens. Russia devises plan to seize firms abandoned in foreigner exodus. So I just talked about how those companies are basically saying, hey, that's it, we're out of here. The Golden Arches being one of those. And now you have a plan, potentially, they say, that they're going to go in and seize them. Hold that thought. I'll read this and then I have something else to show you. In the first explicit response to the exodus of foreign businesses from IKEA to McDonald's, the Economy Ministry has outlined new policies to take temporary control of departing companies where the foreign ownership exceeds 25%. So some might say that's good, some might say it's bad, but one individual in Russia has said that this is not a good idea. Russian oligarch says nationalizations will take us back to 1917. Vladimir Potanin, one of Russia's richest oligarchs and a Kremlin confidant, has criticized the plans to confiscate assets of foreign enterprises leaving the country, likening them to the 1917 Bolshevik Revolution. So this guy is the head of Nornickel. I talked about Nornickel in the previous company when the price of nickel was skyrocketing. Well, he's basically saying I would call for a very cautious approach to the issue of confiscations from the enterprises that have announced they're leaving Russia. Why? Well, he gets into it right here. This would take us back 100 years to the year 1917, and the consequences of such a step would be the global distrust of Russia from investors. It would be felt for many decades. Because think about it like this. Oh, we're going to go in and we're going to temporarily, let's say it's 3 months, okay? So they go in and just take over operations. And what does that say for any company that wants to go and move in after that? Well, they might say, well, I don't know. What if there's tensions again and you take over my company? I'm not going to invest the billions of dollars there. Maybe I'll invest it in whatever, some other country. And so that is a concern long term. So this individual here, obviously a high level individual, saying not a good idea. Whether or not they're going to go ahead, I don't know. But we'll see. So I just wanted to make you aware of that. All these major companies they're mentioning here, H&M and others, that are basically saying we're going to shutter our operations. Then you have the country saying, well, if you're going to shut down your operations, we're going to take them over. I don't know. I don't know how that would work long term, but certainly they may go ahead with it. I will bring you updates on that. Okay. Kremlin says Russian economy is in shock after the sanctions. Initially, when I read this title, I thought to myself, no, they probably didn't say that. But it turns out they did, and I just want to note perhaps the reason why. Our economy is experiencing a shock impact now, and there are negative consequences. They will be minimized, and that's according to the Kremlin spokesman, Dmitry Peskov. This is absolutely unprecedented. The economic war has started against our country, has never taken place before, so it is very hard to forecast anything. So essentially what he's saying here is you're attacking our country, and so it's having an effect on us. So anytime you look at what sanctions do, of course they do have an impact, and there are many different levels of sanctions in general. I mean, sanctions have been there in Russia for a while. But you look at a country like, let's say, Iran, and you could really punish a country with some sanctions, let me tell you. The 50 minerals critical to U.S. security. So we got to know all this stuff. Of course, I know there's a lot to this. I'll leave it in the links in the description as always. Okay, go down there under sources. You'll see the links to everything you're seeing here as well as all my previous videos. But you can just see a breakdown of the minerals and then, why they're needed and different things. Like, for example, lithium, just showing you the EV, rechargeable electric vehicle batteries, basically goes down. And by the way, lithium used in computer parts, lithium is used in all types of things, cell phones and iPads and everything. So it just goes through. And I think it's really important to understand that there's an extreme reliance on these type of minerals, a lot of them coming from places like Russia, like Ukraine, like China with the rare earths and so on. So we've got to watch out that, okay, if you get two sides in a battle, it's not like it was 100 years ago. Now we're extremely reliant on things to come from those places. And what if suddenly there's a disruption? Maybe that disruption is all the borders are closed. Maybe that disruption is a geopolitical event. Could be any number of things, but it's never good. You see this type of thing that happens, and the car industry is one that's been really taking a beating. Porsche to suspend the Taycan production. This particular plant, why? Because Ukraine. They need, I believe it was Ukraine. I remember, let me see right here. Yes. Suppliers in Western Ukraine have been shuttered. So if they're shuttered right now, they can't output those parts. They can't get those to where they need to be put together into a car. And that means the lots do not have the vehicles. That means customers can't buy it. And of course, that means higher prices. Russia's war prompts a pitch for socially oh yeah, this is the one. I read this and I just wanted to spit because it's so stupid. I've talked about this before, the nonsense of ESG and how if you look at these so-called, it's environmental, social, and governance, I believe it stands for. But it's like the green, eco-friendly and all this stuff. Well, look at this. Russia's war prompts a pitch for socially responsible military stocks. You heard that correct. Bombs, guns, and fighter jets aren't typical ESG investments, but two city analysts say they should be. Advocates for socially responsible investing call the idea absurd, and I do happen to agree. You could have one argument or another about what's happening between Russia and Ukraine. That's fine. But I look at the financial aspects here on this platform. Okay, that's what I do. I don't geopolitics and stuff. I get into it only as it relates to the financial side. But when you have to look at what ESG is, it's becoming like more like billions and billions and eventually trillions are going into these things. And it's supposed to be, you would think like, oh yeah, eco-friendly. You're talking about like solar panels and whatever. No, it's Apple, it's Facebook, it's Netflix, it's whatever, all the tech stocks, all the big tech stocks. And you think to yourself, what are you talking about? And even some of the companies that are on there are really, I don't know how they're not considered to be, polluters or whatever. You got to look at some of these lists. I've shown them before on the channel. But generally, it's the top tech stocks. Now they're saying because, of what's happening and, the investment companies basically siding with Ukraine. Therefore, if the military is supplying them the weapons, therefore it's good to include them in the ESG. And then you're going to have pension funds. Your pension fund is going to be buying into this. Your 401k is going to be buying into this. Is that really good? I don't know. You tell me. Maybe I'm wrong. You tell me. Put it in the comments below. Executive order on prohibiting certain imports, exports, and new investment with respect to continued Russian Federation aggression. So this is an executive order that was put through in the US, basically saying that we are going to put more restrictions on the country. Whether or not this is going to have any lasting impact, I don't know. But we can tell, like with the initial sanctions that went in, it was like, hey, Putin's going to be sanctioned. And of course, he's got nothing under his ownership and so on. But this right here is just something that it's step by step by step. So I want to see what happens. I think it's really important that we follow along, okay? Really, really quickly, I want to talk about Bretton Woods III. Now, you've heard about Bretton Woods. Bretton Woods, many years ago, wrote about that in my first book. Obviously, extremely critical to the financial system. You have the war happen. And then suddenly they come together in new terms, a new world order. Oops, just triggered the algorithms. If you appreciate this information, hit that thumbs up. Come on, you got to give me credit for this, all right? All you got to do is support the channel, thumbs up. So this was from our friend, Zoltan. Now, Zoltan, on March 7th, had a few things to say. You can read the report. It's only a few pages long. But he talks about the Bretton Woods III. We are witnessing the birth of Bretton Woods III, a new world monetary order centered around commodity-based currencies in the East that will likely weaken the euro-dollar system and also contribute to inflationary forces in the West. You hear that? Is he right? I don't know, but he's been very, very accurate for the last while. A crisis is unfolding, a crisis of commodities. Commodities are collateral, and collateral is money. And this crisis is about the rising allure of outside money over inside money. Bretton Woods, too, was built on inside money, and its foundations crumbled a week ago when the G7 seized Russia's foreign exchange reserves. So they get into some other factors here, and I think, might be worth checking out. But just understand what he's saying, that we're moving into a new world monetary order. And that is a shifting in power from one to another. And I really caution people to think that empires last forever, because they absolutely do not. I've mentioned it just recently that I'm listening to the audiobook of Ray Dalio's A Changing World Order, and he just talks about the empires rising and falling, all different times of different eras, different time, different geographical regions. It all happens. Every order comes to an end. Every empire comes to an end. It just happens for different reasons, but usually it's way too much debt and unfortunately overextending themselves. People are going to get real nervous. Oil shock upends the Fed strategy. The Fed is set to begin hiking borrowing costs next week in a bid to rein in consumer prices. This is going to be very key front and center next week. I will give you the updates on that. But we have to understand, with inflation going so high, 7.9% on the official fake statistic, you know what the real statistics are. They're much higher. And so the Federal Reserve has to act very rapidly to calm things down. Will they be able to? Have they ever have a soft landing? No, of course not. But we'll see as time goes on how they do react. If you appreciate the information, hit that thumbs up button. I want to thank you for that. Don't forget to subscribe. Hit those buttons down below, and I'll see you on the next one. Take care.